one thing I want to say to the realtors in the room, you made it, right? 2023 was a brutal year. Even as we were going through 23, I was like, it's not that brutal. It's not that bad. 2008 was brutal. And when we look back at it, the team and I got together and we reflected on 23, it was brutal. It was brutal from a property and appraisal perspective, meaning like it was a scratch and dent market. And then also from a buyer's perspective, because most homeowners had a rate in the fours or lower. I think it's like 90% of homeowners have a rate in the 4 or lower. So they weren't moving. So it was like a scratch and dent market on both ends. And when we looked at the end of the year, we had 53 transactions canceled after contract, right? That speaks volumes to what that market was in 23. That's a ton, right? But we got through it. And here's the thing, you're edified now, right? You got through the fire. 24 is already looking better. I've talked to a few agents. I know for us as a team, our applications, it's like as soon as the new year hit, they started picking up. And so the rates dropped, the market's coming back. People are going to start hopping back in. As the rates come down, people are going to let go of those lower rates and want to move, because a lot of people have to move for one reason or another. But they were just white knuckling that low rate that they had, but it's starting to make sense for them to move with these rates dropping. And so, in my opinion, there's nobody better on the planet. And I'm not saying it because he's on our team. I'm saying it because it's true. Even the experts that give financial advice daily, he'll point out things that they do wrong, and he's right the majority of the time. And so I want Tom to just take a couple minutes to tell everyone what's going on in the market with interest rates and what we can expect in 2024, because 2023 really should have been a year where you're edifying yourself, improving your processes and your systems so that you can crush it in 24, because the market's back and it's here and it's time to wake up and go get it. So Tom, can you speak to the rates in the market right now, just for a couple minutes before Kristen starts walking us through this Corporate Transparency Act?
Yeah, absolutely. So I'm just going to share my screen quickly. So I did a update last month, and I'm just going to kind of recap and give a really quick update for where we are now. So this is a rate chart. This is actually a mortgage-backed security pricing chart, which is the opposite. Rates move inversely from price. That just means that when this chart is going down, it means rates are going up. And when this chart is going up, it means rates are dropping. So you can kind of see here, we just really got hit really hard last year, right? Everybody knows rates were going up and away. Really at the end of October is when they started coming back down. And you can see they've come down really nicely. We've made some big decreases. So the Fed pivoted pretty heavily. We started off where the Fed was saying we're going to be higher for longer, we're going to keep rates up, we're going to combat inflation, we're going to do what we got to do. And then they really did a total 180 and said in December, okay, we're probably going to decrease rates about 4 times next year. So the market just kind of went the opposite way and then started dropping rates, which is great for us. And as you can see, I'm going to flip over. So this is the yield curve, and it basically just tells you what interest rate government debt is giving back right now. So you would expect, right, if you give the government short-term debt, so if you give the government your money for 3 months, you would expect a lower rate than if you give the government money for 30 years because it's a shorter time frame. So this is a normal yield curve. And the great thing about this is what it does is it predicts kind of what's going to happen. Every recession has been predicted by an inverted yield curve since the 70s. And essentially what inversion is this, where you get short-term debt actually has a higher percentage rate than long-term debt. And as you can see right here before the dot-com bubble, right, inverted yield curve, you're getting paid more for giving the government your money for 2 years than you are for 30 years. And then when the market tumbles, the yield curve goes back to normal. Same thing in 2008, short-term debt goes up, it's higher than long-term debt, and then it goes back to normal here once the market falls. This is where we are today. We are pretty inverted, right? Short-term debt is very high. So that kind of depicts that we'll probably end up falling. Also, the market is at an all-time high right now. It's within like 1% of being at an all-time high. So it's pretty topped out, and everything is really set up perfectly for rates to fall. Not only is the market data telling us that they're going to fall, but also the Fed is specifically saying we're going to drop these rates. So it's great news for us. We really are looking at, a really good chance of rates coming down in this year, which is awesome. And that's going to just help people, like Jeff said, kind of say, yeah, we're going to move now. We're not locked into this low interest rate because rates are now falling, so we can afford a new home. Refinances will come back. So it's really just great all around the board.
So good, man. Thanks for sharing that, Tom. And for any realtors on the call that want to get a game plan together, like you want to have it boiled down to the minute, like start off with how much money you do want to make this year, and then we'll boil it down to what you have to do every minute of every day. We can help you do that. We'll back it in and we'll help you hit your goals. So if you want that, just reach out to me. We'll do a one-on-one and I'll help you customize it and get there. So with that said, Kristen, can you please make this make sense on how this came through? Like, to me, it came through as a shockwave, like out of nowhere. And I'm like, how is there no pushback? And I don't want to get political, but like, how does this happen? And what are we doing? Like, what's the purpose behind this?
Sure, I will be happy to. And please let me know, can you see the slide that says the Corporate Transparency Act, Introduction and Compliance?
Yep.
Okay, terrific. Well, thank you, Jeff, for having me. I appreciate it. And this did not come out of nowhere, and I will actually explain that in a little bit, but it has not been something that has been discussed a lot. I think because there was hope that it would go away. But before I actually get into the details of the CTA, I just do want to introduce myself. I am Kristen Petrina. I work for Denton, Cohn, and Grigsby. We are in Pittsburgh, Pennsylvania, as well as Naples, but we are part of a global network of law firms with, oh my gosh, I think probably 300 in the United States alone. So I do have to give a little bit of a caveat before I get started that the views and opinions expressed in this presentation are solely those of me and do not necessarily reflect the opinions of Denton, Cohn, and Grigsby PC. And the information presented in this training is solely intended for the audience in this setting and should be treated as confidential. Any dissemination, distribution, or copying of this content without explicit permission is strictly prohibited. And the presenter assumes no liability for the accuracy or completeness of the information provided. Obviously, that means me. This presentation and contents hereof are provided for educational purposes only and should not be construed as legal advice. Both myself and Denton, Cohn, and Grigsby make no representation as to whether the information provided is appropriate for use in a particular case or situation, and legal advice should be sought from a qualified professional regarding specific situations. And this topic specifically, so a lot of times if you speak to an attorney, they always give you the answer, that depends. This is no different, and you will see as we go through the material why everything you ask will be, well, that depends. That depends. And it's because this is very broad. And I do appreciate you taking the time to discuss this today, because speaking with most of my friends that are small business owners, they have not been made aware of it yet. And it is a significant change compared to what we have done in the past, as far as what we've had to provide to the government as far as ownership of our businesses and whatnot. So I do applaud you for being early into addressing this and preparing yourself before you actually have to report the information. So the CTA, or the Corporate Transparency Act, and I'm going to refer to it as the CTA, was passed by Congress as part of the Anti-Money Laundering Act in 2020, as well as brought in through the National Defense Authorization Act in 2021. And this creates a new beneficial ownership reporting requirement to the US government. Those that deal with Europe, this is nothing new. They've been doing this for decades. So when we've mentioned to a lot of our clients in Europe, this is no surprise. And they basically said, well, okay, it's about time you caught up. And basically the reason for this was illicit actors hide their money through multiple different ways. Most of the time it's through smaller shell companies. And I think, if you're, through real estate, you'll have companies purchasing real estate a lot of times. And I'm sure you've heard, you have to know who your customer is. Well, the government is actually now requiring that companies are reporting who their owners are, and basically telling them who their customers are through the companies. And so since the government recognized that these illicit actors can create the businesses and then move the money through it, that is why the CTA came into place. The Congress, once this was passed, provided the Department of Treasury Financial Crimes Enforcement Network, which is also known as FinCEN, to issue the regulation that provides what needs to be reported, when it needs to be filed, what information is included, and who has to report it. The final rule came out in September 2022, and then all of that came out, and they implemented the date that it was going to be required to start reporting. So January 1st of 2024, the new requirement went into effect, and it impacts millions of businesses. Obviously, all of you on here will be impacted in one way or the other. And thankfully, if your company was already established, you have until the end of the year to file this information. However, if you are going to form a company this year between January 1st and December 31st of 2024, you only have 90 days to file this report. If you are going to file business January 1st next year forward, you have 30 days to file the report. So these deadlines are very quick. This year, thankfully, they gave a little bit of a grace period for the simple fact that it is brand new, and FinCEN themselves have not actually notified anybody of this information. And I'm going to apologize right now. I know this material is extremely dry. I'm going to do my best to make it interesting, but I am working with very, very dry material. So what we're going to discuss is what's called the Beneficial Ownership Information Report, or the BOI report. And who must file are reporting companies, and I will explain to you what reporting companies are, who must file, or what the information they have to file is on the reporting company, the ownership, who has substantial control, and then if it's a brand new organization, they do have to file what's called their company applicant, and we'll discuss all of these in more detail. Okay, so who exactly must file? And that's reporting companies. And reporting companies are any U.S. corporation, LLC. So even think about this, if you are investing in real estate and you don't want to put it into your own name and you create an LLC to purchase it, or if you're using an LLC for rental properties, if you as an independent agent have formed a company to file your taxes through it, that is all caught under this new rule. And you will be required to report on that company unless you somehow fall under one of the exceptions, and I'll talk about those exceptions more in detail. But there's also limited partnerships, LLPs, LLLPs. The list goes on. Business trusts can be included. So I know a lot of time with estate planning, they will use the business trust to hold the property. That all can be included, depending on how the state looks at it. So again, depending on where you're registered, will all impact them. And it can be any entity that's created by filing a document with the Secretary of State. And then it also includes foreign reporting companies. So that likely won't impact any of you unless your business is formed somewhere else and you've registered it to do business in the United States. But it may be something that you need to keep in mind as you're working with others, that they may need to report. And it's not your responsibility to notify them, but of course, if you're, discussing it with somebody, you might just want to bring it to their attention. And as I stated, with every rule, there are exceptions, and there's 23 exceptions under the CTA. Most are for entities that are already subject to substantial federal and state regulation. And I know real estate is highly regulated. I mean, even barbershops are highly regulated, but the likelihood that you're going to fall under one of those exceptions is smaller. However, I can't obviously state that you won't without looking at your business model and applying the exceptions. So it is something to take into consideration, looking at those exemptions to determine whether or not you do have to file this report. And we'll talk about where you can look at those exemptions. And there's actually really nice checklists that can help you walk through it. But then if you're feeling uncomfortable as you're going through that analysis, you can obviously contact an attorney. And that's one of the things that I expressed to Jeff at the beginning. While this is very terrifying, this is something you can do independently. You don't need an attorney. You don't need your accountant to do it. However, of course, we're here to support you. If you're not sure if you need an exemption, you're not sure, what address you're supposed to use. If you want somebody to just, watch you as you're walking through the filing, we're happy to do that. But I want you to know this is something that you can do independently, so you don't have to feel obligated to find someone to assist you with it. And so when we're looking at it, we have to file on beneficial owners, what if somebody has substantial control, and then we have to file on the company applicant depending on when it was formed. Now, beneficial ownership is actually broken up into two different categories. So beneficial owner is somebody that's an individual who's directly or indirectly has substantial control over the reporting company or owns or controls at least 25% of the ownership in that reporting company. And this individual might fall into one or both of the categories, and there's no maximum number of beneficial owners who must report because, of course, it all depends on how your company is structured. So you can imagine for some companies, this can get very, very complex, especially if you think about an LLC, owning an LLC, owning an LLC, and it can get really complicated figuring out who those beneficial owners are, especially when it comes to the 25% ownership. And that's something that we could definitely help you with. So what exactly is substantial control? Because it seems like that would be, the owner. Well, no, that's not necessarily the case. And this is anyone that has substantial control over the company. And again, there's no limit to who can have substantial control, but there are 4 kind of general categories when you're thinking about it. So you're going to think about a senior officer, an individual holding a position or exercising authority. So yeah, okay, maybe your traditional roles of CFO, president, but then there's other things you have to think about. Okay, if you're running your own company, you don't give yourself the title of president. Well, you have substantial control if you are making decisions on the business on behalf of. And then we have to think about creative titles that are coming out now: chief people officer, chief HR executives. Those aren't necessarily common titles, but they're ones that you have to consider because they have a power of authority regardless of the title. And then also, if there's somebody that has the authority to appoint or remove certain officers or majority of directors in the company, they may be considered someone with substantial control. Also, an individual who has important decision making, such as directors, or substantial influence over the decisions of the reporting company. And that can be, if you're thinking about it from 3 different perspectives, that could be from the business perspective, the finance perspective, or even structure. So are they in charge of the nature and scope of the business? Do they handle the sale, the lease, the mortgages, other principal assets? Or are they looking at compensation schemes and incentive programs? And are they considering maybe reorganization, dissolution, or merger? And then the 4th is anyone that would have any other form of substantial control. And unfortunately, they didn't define substantial control, so you really have to use your best judgment when it comes to that.
Wow.
Yeah. And then when we talk about ownership, this is a little bit clearer until you get into those really complex ownership structures. But when it comes to ownership, so remember, when we're talking about beneficial ownership, we're talking about either substantial control or ownership, and/or. So it could be both, but if they're just substantial control, but they're not an owner, you still have to report it, and vice versa. If they're an owner, but did not have substantial control, it will still need to be reported. And then when you're looking at this is going to be anybody that has 25% or greater of ownership in the company. And that can be through stock. That can be through a capital investment. That can be through proprietorship interest. It can be contracts, some sort of agreement, any relationship. When you're thinking about trusts, it can be, the trustee, it could be the beneficiary, the grantor, the settler, and it all depends on how they hold those assets. So it can get, when you get into the less common company structures, it becomes a little bit more complex. And then, like I said, you just have to be very careful. If your company is owned by another company, you have to figure out who owns that. And then it can be this chart, this graph of, okay, this is who owns here. Hopefully your structures are a little bit clearer and it's easier for you to figure that out. But again, if not, happy to do it. We can easily figure that out for you, me or any corporate attorney that is comfortable with the CTA. Now, there are beneficial owner exceptions. The entire way, there's carve-outs through this. And there's 5 exceptions, and I'm not going to go through these in great detail because they don't apply a lot of times. But everything that I am just highlighting for you, but not discussing in depth, is actually outlined in one of the resources that I'm going to notify you of at the beginning. And the reason I'm not going into depth is simply because they are, it's uncommon that they're going to apply, and for the sake and respect of your time and your attention. So if the owner is a minor child, if they're a nominee, intermediary, custodian, or agent, an employee that is not one with substantial control, inheritor, or a creditor. And again, those all have, their definitions, and we'll go through it, but I did not want to spend a lot of time on that when there's more important things that actually will likely apply that are beneficial to discuss today. And so, okay, we know we have to report who the company is. We have to report the beneficial owners. If the company is formed at January 1st, 2024 or forward, you will have to report your company applicant. And the company applicant is somebody that is actually forming and filing the documents to form the company. So and FinCEN limits it at 2, because I know that a lot of hands can get involved. If you're using an attorney, is it the owner that's the company applicant? Is the attorney? Is it the paralegal? Is it the formation company? The attorney will determine that. If you're forming a company and you're doing the filing of the documents, you are the company applicant. And so anything formed January 1st after will have this company applicant, but if your company was formed before that, you do not have to report this, and you'll be able to move through the report without issue. So that's really your basis of your company applicant. And I'm not spending a ton of time on it simply because it's only for those newly formed companies. Now, what exactly needs to be reported with each of these? So for the reporting company, if they're a US entity, they're going to have to include their name, any alternatives or trade names or DBAs that you're using, the physical address. You cannot use PO boxes, formation agents, or third-party addresses. It has to be the physical address where you're located. Now, if you don't have, say you don't have an office, it's going to be where you primarily operate. So if you're operating from home, that's going to be the address that you would use. And then it's going to be the jurisdiction where the company was filed. So if it was formed in PA, you're going to put PA. If it was formed in Delaware, which I think probably 90% of LLCs are formed in Delaware, you're going to put Delaware. So you just have to include that formation. And then if there is a foreign entity that was created in a different state or tribal jurisdiction, you want to make sure that you're including that as well. And then also the company's TIN, EIN, or LEI, or any identifying number. For each beneficial owner, it needs to be a full legal name, date of birth, complete current residential address that is used for tax residency purposes, and then one of the approved identifications. And I'm going to talk about that on the next slide. And then for the company applicant, it's the same as beneficial owner, full name, date of birth, complete current residential address, and the unique identifying form of ID. And unfortunately, this information is not an option. It is required, and we will talk about the penalties in just a few slides. So acceptable forms of ID are a non-expired US driver's license, a non-expired identification document. So if you don't have a driver's license, a state ID, a passport by the US government, or a non-expired passport by a foreign government. And that's only if you do not have a US issued identification. And again, there's some special rules of when you wouldn't have to file this report. One, if you do meet one of the exemptions, or if you are owned by an exempt entity, you might fall under the subsidiary exemption. But that's going to depend on how the entity that owns you falls. Again, if it's a minor child, if there's a foreign pooled investment vehicle or a company applicant doesn't exist prior to January 1st, 2024. I'm not going to go through these in detail because the likelihood that they're going to apply is very, very small for small businesses. And of course, all of these exemptions are made for those that are larger businesses. And it's impacting those that are smaller, which is a little bit frustrating because you're the least, if if you were to fail to do this, the penalties are significant enough that it could put people out of business. And that's why it's really important that we're covering this and you make sure you're filing a report when by the deadline. Now, if you have multiple businesses, you can obtain a FinCEN identifier, and that's going to be your unique number that can be used for that company. It can be used for your individuals. So say if you have multiple businesses and you don't want to have to input your information every single time, you can apply for this FinCEN identifier. It's free. It takes 5 minutes. You plug in the information that was requested. And then when you go to file that report, you would just put in that identifier instead of having to constantly enter your information. But you'd have to obtain it for each business if you wanted to. But I think honestly, it's probably easier to just fill in the company information and then put in the FinCEN identifier instead of having to constantly repeat. It's not required in any way. If you say, I'm not doing this, I'm going to go input my information, that's fine. But it just makes it easier if you have multiple businesses to get that information. And like I said, when you apply, you do it electronically on the FinCEN's website, which I did provide at the end. And you put your information, it's exactly what would be requested if you were filing the BOI report, and then you can submit it and you'll get the number back within 5 minutes max. There is no way to report an inactive one or to terminate it as of now, but I'm sure as this moves forward, they'll come up with ways to do so. And then how do you file the report? And I know we're pushing right up at 10 o'clock and I just have a few more slides to cover. So thank you for being patient with me. So how do you file it? Okay. And like I said earlier, this is something you can do on your own. The report is quite simple. It's just that information that I requested and you just plug it in right into the website. It moves to the next category and then you're done. It's just making sure that you're providing the accurate information. So what you'll do is you'll go to the FinCEN website, and I do have that link at the end, and it takes you directly to the beneficial ownership site. It'll say, enter your BOI report. You'll click on it, and then you can put it in. This is where you can do this, and I encourage you to get a little bit comfortable with inputting this information, even if it is under like having an attorney or somebody else observe the first time. It's important that you get comfortable with it. And the reason is any single time a change occurs, if you have a name change, your passport expires, your driver's license expires, if you use your driver's license and your address changes, it has to be updated within 30 days. So this is something you have to be comfortable with simply because of those shortened time frames. And I know a lot of law firms aren't actually doing the report for you or on your behalf. So you want to get comfortable, but anybody will be happy to guide you through that. There is no filing fee for the report. How nice. It is free and you'll submit it and you only have to update it if a change occurs. So this is not yearly. It's not like a tax return where you have to update it yearly. It is done until a change happens. And there may be certain times where you will not be able to file it electronically and you'd have to go through FinCEN directly, but those are going to be really, really slim. And it's more than likely going to be because there's something odd with the address. Like maybe you don't have a US address and you have to file through FinCEN, but that should not impact most of you. And then when do you file this? I had mentioned this earlier, but I just want to make sure I reinstate it. If your company exists before January 1st, 2024, you have until the end of this year to do so. I would not wait because as you saw, the information you're going to have to obtain and from whom you're going to have to obtain it, going to receive pushback, understandably so. So I would start maybe notifying those individuals and getting that information collected so you can submit it. If it's formed within this year, January 1st to December 31st, you will have 90 days after actual or public notice. Actual notice relates to the creation or registration through direct communication with the Secretary of State or similar office. Public notice is the creation or registration that appears publicly accessible on the registry that's maintained by the Secretary of State. You cannot go by the more recent notice, it is going to be based off the first notice you received. So if it's not published for 3 weeks, you don't get an extra 3 weeks because you know that immediately that it was formed. So you have to start at that clock. And then if you file next year, if you form a company next year, you have 30 days. That's it. No ifs, ands, or buts about it. You have 30 days. So it's just important to consider, even if you're considering forming in 2025, you may want to do it this year just so you have a little bit more time to do so. And as I stated earlier, any changes to the reported information do require updating, and they have 30 days to make those updates. So that's going to be change in beneficial owner. So is there a transfer of ownership, a sale of the ownership? Did the reporting company become exempt? Transfer of ownership interest due to a death, changes to identifying documents. So perhaps you change the address, maybe you change the form of company. So if you were an LLC and you changed to a corporation, or anything like that, you'll need to make sure. If you identify any mistakes, you have to report that within 30 days of becoming aware of or had reason to know the inaccuracy. So basically, the second you learn about it, you need to make sure you're filing an updated report. And you do so going through the exact same method that you would when you were filing it. If you were previously an exempt reporting company and you no longer qualify, you need to file it within 30 days. And then if you become exempt after the initial reporting, you just have to notify that you're exempt so that you no longer are going to update that information. And this is where it is important and why we're talking about this today. And I'm glad that you're thinking about it early. It is unlawful. This is not a voluntary reporting. It is unlawful through the CTA for any person to willfully provide or attempt to provide false or fraudulent information, or to fail to file a report within the time frame. And if you don't correct information once you're notified of it and it's not within those 30 days, these penalties can apply. Now, being kind, they did offer a safe harbor initially that if there's a mistake or an omission, that you do have an additional 90 days to correct it. But I'm really going to encourage that you try to meet the deadlines that are provided, because it all depends on when that safe harbor will no longer exist, and how many people are taking advantage of it. So we're going to look at it that safe harbor is not there and what penalties could apply. And there are civil and criminal penalties. And so if you fail to file this report, it could be civil penalties up to $500 per day of the violation, as long as it's continuing. Now, they did discuss potentially capping it at 10,000, but that has not been decided yet. And then there's also criminal penalties. And again, that can be fines up to $10,000, as well as imprisonment of 2 years or both. And this can fall not on just the owner of the company, but also senior officers that knew of the reporting requirement and did not make sure that it was filed. So this is holding more than just the owner of the company responsible for it. And then additionally, there might be other fines or penalties that might come along if they find out that they were fraudulently inputting. So that could be, falsification or anything like that, but that's all going to depend on what occurs. So it really is important that you make sure you're filing these. So that was it. I have the resource slide in the next one, but I just wanted to see if there's any questions, because I know it's a lot of information. I know it's a lot of dry information, but do you have any questions for me right now that I can answer to try to simplify this or just ease any concerns you may have?
So I would say, from a show of hands, who's ready to become an attorney and drop being a real estate agent or whatever you want to do? Like, I am so thankful that I have my job and I don't do your job. Man, way to wake me up first thing in the morning. It was dry, but it's like it's got my blood boiling, like on levels, just from everything that we're seeing in today's world.
Right.
But can I share this slide deck that you had?
Yes. Yeah, I did. Yeah, I sent you the slides where notes can be put, the slide deck can be shared. Absolutely. Yes. And
then you said there's no cost to file, but what do you think an attorney would charge to do this paper? Because I know you said they could do it themselves, but like in our industry, that's like somebody trying to be their own realtor, right? And then we're, as a lender, when somebody goes, "Hey, I'm doing a for sale by owner," we're over here going, "Oh my goodness." Because
Yeah.
like so much that real estate agents do that people don't realize,
Correct.
and then it's a train wreck.
Right.
And with these penalties, like, what do you think somebody would charge? Do you guys have a fee set, or do you know?
Yeah, so we don't have a fee set specifically for this, but I would say that it's gonna, instead of it being like an hourly cost, because it will, unless it's a very complex structure, and if you own the company yourself, you should have your information readily available, and it could take 10 minutes, if that, to file the report. So I would imagine, you know, if you came to me, I would do a flat fee, you know, I would have to talk to my GC to find out exactly what it is, but it would be a flat fee. And just for example, I work with our trade group a lot, and there's a report that needs to be filed that's very similar to this, but it's for the foreign investments. And if there's a change in ownership or structure, they have to report it. And one of the attorneys, he sits and he just observes, and the client inputs it and just guides them along the way. So it's not us doing it, it is you, simply because of, you'll know when you need to update that information. If your address changes, we would never know that. So we can always help guide you through it. That's why I'm saying, like, while this can be done independently, we will gladly help you navigate through it, figuring out who your beneficial owners are, figure out, do you need a company applicant? Do you fit an exemption? We can help you with all of that, just to make sure that you can file this confidently before you do so, and then even help observe.
The other part that gets me, with the millions of people
Yep.
that are going to be filed, the millions of reports that are going to be filed.
Yep.
How does FinCEN have the infrastructure?
Sure. Yeah.
And then get it done and get it back and be so generous to not penalize us anymore.
Right.
If we don't get it done with an extension. So
yeah, and that's a really good point. And so my prior industry before becoming an attorney, we dealt with FinCEN. I dealt with FinCEN for 17 years. And there is typically a delay. They did create an entire new system to house this. It was built, I'll be honest, we didn't expect it to be up and running January 1st, because as of December 1st, it was still in progress. But it's up and it's functioning. We've been able to have clients file and they've had no issues. I agree with you that it may be a while before they're able to review it. However, I wouldn't count on them to not look at it. And I know it's asking a lot of private information, right? It's asking for your passport. It's asking for your, address. It's all stuff the government already has. It's just a matter of now you're consolidating it in one place. And it's solely because they are trying to filter out those illicit actors that own companies that have it for the wrong purpose. And that's a little bit easier for me to say, simply because I did come from, my background was in money laundering investigations. So I look at what the government was looking at, and believe me, it's far more in depth than the 4 pieces of information they're asking for.
That seems to be a hot topic for our government right now. So maybe what's coming on. So there's a question in the chat. It says, aside from being on this call, how would we have been notified? I have no notifications and we own several LLCs.
Yeah, that's a really great question. So one, if you have an attorney, they should have notified you. If they didn't, shame. Your accountants may notify you if you file taxes in April, even October. FinCEN has stated that they will send information out. However, they haven't said when. So again, it's kind of a guessing game as to when they'll send it out. But that actually raised a good point that I meant to address, and I forgot. Where they will send the information is to the address that's on wherever your company was formed. So if it was formed in PA, it's going to be sent to the address that is on your state registration. So if the address is not up to date, you will not receive that information. And it is important to check that, because PA has a new annual reporting requirement that's going to come out in 2025 that will be directly impacted by your address not being correct. So you want to make sure you're checking the Secretary of State, that the address is correct. And again, that's something that an attorney can help you with. Because I wouldn't have even known where to start until I started doing this work. So that's something that we can always help you with, but that is how they planned on notifying people. And truth be told, I'm shocked that I haven't seen a single news story.
Right.
Everything I've read on this has just been between firms drafting articles and maybe sending it out to their clients.
It's like, how is this not out there? Like it's
Yeah.
That's the part that gets me. It's like, how is this not out there with such a hefty fine penalty on it?
Exactly.
To me, like the lifeblood of America. Like how is this?
Yep.
You know, the small business owners. The next question: Do you need to file S corps, S corps, or does this pertain to LLCs only?
No, it's unless you fall into one of those exemptions, it doesn't matter if it's an S corp, it's C corp, LLC, LPs, LLC, it does not matter unless you meet one of those exemptions. And one thing too that I know, like my firm, our goal was to notify our clients within the first quarter, assist them in the second quarter to get the data together, file in the third quarter. So you may start to hear from your attorneys over the next coming weeks. I know with us, we have a memo that's drafted up. Hey, this is what's going on. So because it's still very early in January, that may be why you have not heard, because you do have until the end of the year. But that's why I'm really glad that you are starting this early and you're having this conversation early, and then you can get it, kind of out of the way.
Okay. And then the other question was, and this is like, any ideas on how to remember to file this whenever you have a change in the future?
Yeah, so that's where, especially because of the short turnaround, that's something that I've tried to think about as well for myself. I don't know if I would even maybe like every 4 weeks have a reminder on your calendar that pops up that just says, did BOI information change? Did anything change? It can also be something that you consider, as if you're having monthly meetings, if you have like a weekly check-in, hey, did anybody's information change? And I know that's annoying, but until it becomes something that's a little bit second nature, it may just be that repetitive in your face, challenging yourself to question, did something change? Because remember, if something changes, if it's yourself, you need to you changed it, you have that 30 days. But if it's somebody in your company that you weren't aware of, then it's from when you find out, right? It's when you find out and then you update that information. So there is that grace period. And that's why I would suggest maybe having a calendar reminder of that every 30 days to check and see if anything changed with anybody.
And so there's another question in the chat, and this is this happens, like people getting catfished and their pictures thrown and stuff. But like, what if a fraudulent company created an LLC in my name, and I'm not sure if it is even in my name, or maybe. Do I have to do anything for this LLC? Nothing was ever done with this business at all. There's no paperwork or anything on it.
Yeah, so obviously that would be something that you would need to speak with your attorney about if that arose. But it's like you would have to probably address it and have the company close, but you don't have to file anything on a company that's not yours. How would you know if that company existed? You wouldn't even know. So that reporting responsibility is not going to be on you. Where it would come up is if they come to you and say, hey, this company exists, why have you not filed the report? Then you can address it at that point and say, well, I don't even know what this is. And you can show, evidence of the fact that it's not your company.
And then the thing is, like, how many businesses are going to close because they don't want to file this, right? And it's like, the next question is, what if I close my business down by June of this year? Do I still need to file this form?
No, that's a good question. No, it's going to be if you're in existence by the end of the year. Yeah. Okay. So if you're going to close, don't file it. But if there's a chance you're still going to be in existence, then just don't forget to file it by the end of the year.
And how would FinCEN know if my name is on that LLC?
So that is going to be based on your state filings, what information is included there. And because that's a good question. A lot of times, like I said, if an LLC is formed with a nominee or something like that, that's where you have to file that information. So basically it's working on the honor system. But I promise you, anything that has been, if your name's on the tax returns, if your name is in any of the state filings, if you've signed anything for the company, they know. They already know. Yeah.
Any other questions? Anybody else have any other questions? Was this helpful?
Did it terrify everyone?
Yeah. Like the first time I heard it, my chin hit the floor and I'm like, make it make sense. Like, what are we doing?
Yeah.
How did this come out?
Yeah. Yeah.
So I would say, we talk about on our team all the time, when we start a conversation with somebody about a loan application, we don't just talk about the loan. Like we talk to people, and even the other day I was talking to somebody and it was a new customer. He owns an LLC and I brought this up to him. I'm like, hey man, did you know that you have to file this paperwork in 2020?
Right.
So as a real estate agent, as a professional, as an insurance agent, as a financial planner, as a barber, you're going to be talking to a ton of people, man. And in the shop, you can be talking about this all the time. Let people know that they got to file this paperwork in 24 if they own a company. And then if you don't know who to call, just text me and I'll get you in touch with the right people. But just let people know that they have to. Because here's what I don't want to see. Like, I don't want to see hardworking, good people that own a company never hear this information and get jammed up with a $10,000 fine or serving time in prison. We're out there busting their tail making money, but they didn't hear about this rule that came out. So spread the word. And if you guys need anything, just text me and we'll help as many people as we possibly can.
Yeah. And one of the things too that I know you're looking at and saying, okay, well, they may not know, this is new. It's going to take some time. And I promise you, from what I did in the past, they will know. It may take a year or two before they get to it.
They're going to know.
The government will know. And so that's why while I understand the hesitation, that's why I try to point out it's already data that they have. Like your passport's issued by the US government. They already have it. They have that picture. It's on file. It's just consolidating it into one place. And so that they know if somebody is not up to any good, they can go back and be like, okay, and they can find them. But I know, criminals are smart. They'll figure out ways to falsify it, and it's going to rely on the honest people to just make sure that they file it. So one thing that before we concluded that I just wanted to point out is that the FinCEN BOI website. So this first one is actually where you would go and file the report. That's the website you can go to. And it also retains all of this other information, the FAQs, the quick reference guide, and small business compliance guide. One thing that I will say that they actually did really well was the small business compliance guide and the FAQ. The small business compliance guide has checklists for everything. Do I meet an exemption? You can go through every question they'll ask. It answers questions on like, am I a beneficial owner? And there's the checklist. So it does help you to kind of think about it. If you don't want to engage somebody else to assist you with it, these resources are available. And then the second bullet point is the one that's where the actual filing, and you can download a PDF of it so you can fill out the information and then submit it, or you could just do it directly in the system. And then, this does not have, whoopsie, I apologize. I did have my phone number and everything on the slide, and I'm not sure exactly where it went. But this is my profile, and it will directly send you to my email, my phone number. It gives you the direct contact to me at Denton. So if any questions arise, I'm happy to assist. You can go to Jeff, you can go to your attorneys. But obviously, if you decide to come with us, we'll just have to, put you through the engagement letter and just make, get that specific legal relationship. But we're happy to help you with this. And I have almost 20 years dealing with FinCEN, so I can definitely give you some advice as you go through this.
Chris, not to shoot the messenger, but thank you so much.
Yeah.
For coming on and talking about
no
this.
problem. I'm happy to do it.
Everybody here. I appreciate you doing it. Thank you.
Yeah, of course. Thank you for having me.
Yeah. All right, guys, have a good day. Crush 2024. If you need anything, we're here for you, and we'll see you soon.